Good afternoon. My name is Joshua Mwangu, and we have Chiyaba on my right and Mr. Phillip and Mwangu on my left. We are going to be talking about debt securities, and our definition is debt securities are tradable and negotiable loans or liabilities which gain interest or a certain amount of value. Mr. Chiyaba is going to talk about treasury bills and bonds, and on my left, Mr. Ngongo is going to talk about equities, and we'll take it from there. So, good afternoon, gentlemen. Hello to you. Good afternoon. Yeah. So, Chiyaba, please tell us about treasury bills and bonds.
Okay, so, as defined by Mr. Joshua here, government securities are debt instruments which are issued by the government through the Bank of Zambia. These are basically loans that the issuer issues out to the lender, and the lender being the people, as we loan the money to the government.
Okay. Yes. Okay. And so, you can continue. Sorry.
Yeah, and the treasury bills are short-term government securities, while bonds are long-term government securities.
Okay. Mr. Phillip, just sorry to take you, just to cover up some of the complex terminologies that Mr. Chiyaba has said. What interest or what type of returns do we expect from treasury bills and bonds?
Okay. The way bonds are designed, you find that if you make an investment in bonds, you're supposed to get your returns after 6 months.
Okay.
So like at the moment, if you check the Bank of Zambia website, you'll be able to see the returns that the government is giving.
Okay.
So like on a 10-year bond, you are guaranteed of getting about 21%.
Okay.
And for a 91 days bond, which is a treasury bill, you get about 9%.
Okay.
Sure.
Yeah. So treasury bills and bonds. So Mr. Chiyaba and Mr. Ngongo, you've said that they are actually loans. So we loan money to the government, right? And we give back interest. Yeah. Right. It's very, a bit complex when you say treasury bills and bonds, but at least we've got the idea of borrowing money to the government. Now, we wanted to also look at the advantages and, the risk associated to treasury bills and bonds, because, these are long-term goals. These are long-term financial goals, and you said their bonds are got 15 years, right?
15 years.
Yes. So I think we would also like to learn what are the risks and the advantages. I don't know who would like to take up the advantages. I don't know if it's Mr. Phillip. Would you like to take up the advantages? Then Mr. Chiyaba would take on the risks.
Okay. I'm going to talk about the advantages.
Okay.
So basically, investing in government bonds gives you that guarantee of getting your money back.
Okay.
Since the government, they are the owners of the country, so to speak.
Yeah.
So the moment maybe they feel they won't be able to meet that debt obligation, they can print money. They can print money, but
exactly.
of course that has an impact on inflation.
Yeah.
But the other thing they can do is they can raise taxes, which is a good thing. They can raise taxes. Okay, it can hit as summer, but they'll be able to meet that debt obligation. So the big advantage which is there is that investing in government bonds means that the issuer won't default. There's guarantee of you getting your money back, no matter what happens.
And Mr. Chiyaba, you spoke earlier, just before this session we're having. You were talking about how the government of Zambia hasn't defaulted on any payment or credit or debt obligation. Tell us more about that and how it affects the interests of the country and how long-term financial investors like us can look forward to investing.
Okay. So, before you actually invest in something, it's always good to know the product you're investing in.
Okay.
So, an amount of research is necessary on the product you want to invest in. So, like in our case, since we're speaking of the bonds, the government bonds of Zambia.
Yeah.
Yeah. You'll find a situation where it has a good track record in the sense that the government of Zambia has never defaulted.
Has never defaulted.
To add more landscape, we would go as far as saying no African country has ever defaulted.
So would it be safe to say that is the major risk is the government defaulting?
Some might say it's a major risk, but we don't like to give risk any certain measurement. But it's not the only risk that you can incur when you invest in bonds.
Okay.
There's also price risk, because these bonds have a price, and when you're in the market, of course, you always look for an attractive price.
Okay.
Yes, and as you're aware, the associated, Mr. Ngongo mentioned about interest rates.
Yeah.
Yes, there's also an interest rate risk. So all those risks have to be taken into consideration with regard to market participation, because market risk is also a risk.
Okay. Yeah.
Just to add on, there is a very strong relationship between the interest and the price of a bond.
Okay.
So you find that you can buy a bond today, and the moment that the interest will increase on that bond, meaning the price of the bond will go down. So meaning those bonds that were issued earlier are no longer, they may be attractive, but they're not that attractive, you know what I mean?
Yes.
So, and it becomes difficult for one to resell that bond. So that can be taken as a risk as well.
Okay. So I think the main reason for this financial indala we are having here is what we have discovered is that the interest rates of treasury bills and bonds in developed countries like the United States and the West, the United Kingdom and all these developed countries from the Deutsche Bank and everywhere, their percentage interest is about 2 to 3%. Mostly in developed countries, doesn't even go above 4 or 5% in very developed economies. But we see like the opportunity we have in this domestic market we have in Zambia with the Bank of Zambia, that interest rates are going to 20%, if I'm not mistaken. So
21%.
it's a great opportunity. So just please explain to us why there's such a huge difference in the interest rates. I don't know who would like to take that. Would you like to take that, Mr. Chua?
Okay. You see, the thing is, in developed countries, as much as the country is developed, meaning you know that its financial industry is also developed. So people are aware of these products, and they know the significance of these products personally and to the economy.
Okay.
So it's all about sensitization, which is what we're doing here. If we're aware of the product, there'll be high demand when we know it's the benefits it has, personal benefits and economical
benefits.
Yes. So some of the issues that make the interest rates differ is the demand is a factor.
Okay.
Also, as well as how developed the financial industry is.
Oh yeah, credit rating.
Credit ratings, yes.
Okay. So we've spoke of the financial literacy of the industry. Is it safe to say that in developed countries, because of their developed or fast economies, and the risk of default in these developed countries is low? That's why they have a low return on interest. Is it safe to say that?
Exactly. Because the thing is, you find that those guys, the institutions don't find it difficult to pay back the debt.
Okay.
So the risks are not that high. So I think one thing that you should put to mind as an investor is the higher the interest, the higher the risk.
Okay.
So meaning in those countries, the risks might be there, but obviously they're minimal. That's the reason why the rates are like that. But the other thing is there's a relationship again between inflation rate and the rates that maybe the central bank can put up in the market.
Okay.
So if you check at, if you look at the interest, the inflation rate in USA, you discover that it's between 2 to 3%, and that's how the rates, the interest rates are determined.
Okay. Yeah, so at least we spoke about financial instruments, these treasury bills and bonds, and I just want to take you back, about equities. Please just tell us a short definition of equities, even though we're not going to go in depth with it now. Can you just share to us what equities or stocks, what does it mean?
Okay, basically this is just owning a part of a company in monetary terms.
Okay.
In monetary terms, you just own a share, and you find the situation where companies that list their companies on the exchange.
Yeah, like for here it's on the Lusaka Stock Exchange. Yeah.
You find that they are looking for capital. So with the help of the people, it comes down to not exactly like government securities, but it's
somehow like a loan also.
Somehow like
we are investing.
Yes.
Though in equities there's no fixed return or interest or
exactly.
Okay.
But they can issue corporate bonds.
Yeah.
Which is basically a loan, so to speak.
Yeah.
So instead of the company paying dividends, they'll be paying interest on the money which was lent to them.
Oh, that's great. Okay, I think we've spoken about debt securities, and I think later on we'll talk about corporate bonds and equities in the next episode in our series. What I wanted also to talk about was the economic business cycle. So we've agreed, and from time and time again, academicians have agreed that there are 4 stages in the economic cycle. So there's the recession, depression, the boom, and the peak. So the recession is usually characterized by slow economic growth, inflation a bit rising up, unemployment rising up, goods and commodities in the consumer price index going up, and that food basket on basic goods and necessities. Prices usually go up, people lose jobs. Zambia has actually, our country has actually coming out, we're trying to come out of a depression right now, where, we had crazy inflation, the kwacha was depreciating and we're losing it.
Even the copper prices were down, right?
Exactly. So that was the time of a depression. So during a recession and depression, it's a bit harder to invest in these securities, right? So like right now we're in the boom phase where, economic growth is going up, the kwacha rate is stabilizing, and inflation is, down to 1 digit. So would it be safe to say that during economic cycle, the stage, to be specific, in the boom, is it safe to say the boom and the peak? Is it safe to say that this is the time to invest in financial securities which are long-term, considering that economic crisis is bound to happen? So I wanted to find out from you guys, looking at our country is going through the boom phase, would you advise people to invest to hedge their risk in the future of the economic crisis? I don't know who would like to take it up first. Maybe I can start with you first.
So the thing is, for me, I think I would advise people to invest.
Okay.
Because this is a very great opportunity for people to make money, or to invest, so to speak.
Yeah.
Looking at the returns which Bank of Zambia is giving, especially on the bonds.
Yeah.
So the thing is, the good part with bonds, quite right, we do know that obviously after some times, because at the moment we're in the boom, right?
Yeah.
So like obviously after some time things might change.
Yeah.
But if you're locked in, say, a 15-year bond,
yeah,
so meaning that might not hit you in future if you bought a bond, because you'll be guaranteed of getting your interest or coupon every year.
Oh,
so that can be a good thing.
It's a good way to manage risk. Because,
exactly.
Looking at it, we're in the boom phase, we're waiting for the peak, and back into the depression again.
Yeah.
So I think it's a good time to invest. I don't know, what do you think about investing in financial securities?
No, I actually agree with both of you. In fact, it's always a good time to invest.
Okay.
Because there's always someone, it doesn't matter what age or what current situation you're in, but it's always a good time to invest. I wouldn't say no, don't invest in when in depression, don't invest. I would still encourage you to invest. In fact, that's probably the best time
to invest with the higher interest.
Sure.
So, I would encourage anyone to invest in government securities anytime.
Okay. Yeah. So we just on the recap on the business cycle. It's the depression. The recession first. That's when now the economy starts going down. We're losing it. Depression at the worst stage, where even banks lose it. And we had a couple of banks in the past, even in Zambia, with Meridian and Intermarket Bank totally going bankrupt. So that is definitely the depression. So now we're going to the boom phase. That's when the economy is picking up, economic growth and economic recovery. Then we will eventually get into the peak phase where the economy is it's considered more efficient and things are going well. So this is the time to invest in it. Yeah. So the next part we're going to talk about is our copper concentrate segment, where we talk about how copper-rich nations like us, the opportunity we have for this great commodity. Looking at it from the news, there's a lot of electrical products that are coming in, batteries, phones, even cars now that are, and copper is a very essential component to making these products. So the question which we all have is, as Zambians, how are we supposed to, invest or, feel the benefits of this growth? And copper is bullish. So today it's been trading at $7,179. It's about 72,000 kwacha per metric ton. So it's a lot of money, eh? Yeah. So I wanted to ask Chiyaba, because you spoke about the motor industry and how the Chinese want to rival Tesla, which is now the biggest, one of the biggest, the biggest electrical manufacturer. Huh?
Yes.
Yeah. So please tell us about that so we can learn from you.
Yeah, actually, these are interesting facts that I read. I read an article on Bloomberg, and there's a Chinese competitor competing with Tesla.
Okay.
Yes. They'll be manufacturing electric cars as well.
Okay.
And there's quite a huge price difference. So I'm sure the Chinese are looking to.
It's about 50% cheaper.
50% cheaper.
Yeah.
About 50% cheaper. So it's actually good for the copper industry, knowing the fact that these electric cars will need copper as a component. Yes. Okay.
Mr. Phillip and tell us about the opportunity you see in the copper industry.
Copper, like for me, I've always been saying, basically for me, I'm bullish in copper.
Yeah.
The prices of copper are supposed to go up.
Okay.
And what are we doing as a country to just benefit from what is happening now? There's huge demand of copper out there. So the thing is, we have ZTCM in Zambia.
Okay.
Obviously, have to make some expansions and help us benefit from what is happening around.
Okay. I think ZTCM is actually a private company that holds most of the shares of government, right? Yes, but we want to have more value addition in the copper industry, obviously, and in Zambia ourselves. So we were looking at some basic elements of copper. Like I did some research. Copper is a natural antibacterial. Most doorknobs are an alloy of copper, so it's an antibacterial. You know what I mean? So we can definitely go further with that, with copper. So there's a lot of research and development need to take up in the copper industry.
Yeah. Obviously, maybe our good government has to put some money aside for research and development,
even
in the innovation.
And innovation, huh?
Sure.
Yeah.
There's a lot of brilliant people out there. I saw a commercial. It was my first time seeing a commercial on copper cooking, utensils. Call me ignorant, but that was my first time, and I think that's something to look forward to, because we get to adopt certain things that we don't even do our research on. We just adopt and start doing it. What if using copper utensils is the best thing ever, or if it will be the cheapest thing.
Actually thought maybe it's more efficient because it's a good heat conductor, electrical conductor. So we should definitely look at that, and we'll keep on telling people about the uses of copper and what we think is best for the copper industry. Yeah. So I don't know, just to wrap it up, just by the way, you're talking about investing in copper as a commodity. What platforms would you advise people to use, or should we have our own platform as Zambians?
Okay, yeah. I think that's interesting because the thing is, like looking at what is happening around, there's going to be huge demand for copper. So I think it will be important for us to have a proper platform to trade our precious metal, copper. Because if it's put on an exchange, then you have so many investors around. We have Tesla, we have Chinese companies. They'll see what is happening here in Zambia. So let's just say we put up a global platform which is exposed to everyone. So in London, obviously, investors will be able to see what is happening.
Exchange,
So this can be a good thing, really. So like for Zambia, we have the Lusaka Stock Exchange. Then there's a new company which just came on board called Pan-African Exchange.
Okay.
So obviously those companies can offer us opportunities to put our metal there and trade to the people out there.
Okay. Usually before the end of the program, we like to talk about any financial investment opportunities we've seen. Like I'll definitely go with Phillip on copper being bullish. And I think that's a good investment area. In terms of the Zambian economy, real estate is never been better. You know, it's a long-term investment, very good returns, and it's a solid investment also. I don't know about you, what you think about it.
Yeah, I agree. Copper is bullish right now, and I would encourage people to invest in copper. Whether it's bullish or bearish, I think it should be a policy somehow for every. I think I don't know if it's Italians.
Yeah.
I think Italians. If I stand corrected, the shareholders for Ferrari, most of them are Italian.
They're loyal to them.
They're loyal. No matter what happens to the company, they still hold. So if we as Zambians, copper-rich nation, we just give, our mineral what it deserves. It's only lacking one thing, and that is value from us, the people, to believe in it and be confident in it. That's all it's lacking. It's just lacking value and appreciation, and that's all anything needs. I mean, it's a natural resource.
We should believe in it.
We should believe in it.
Maybe
It's there for a reason.
We should definitely go ahead and make it our reserve commodity than gold. You know what I mean? We patronize our own industry. It's given lots of jobs. And the big conglomerates definitely are enjoying themselves, but I think we can go a step further in research and development and innovating new products, and definitely buying stocks in these shares.
Because what if we run out of copper?
What if
it will happen?
And that calls for diversification. And for me, I think I can just encourage people out there to just consider making investment in some commodities as well. Because you know that, like the way we are located here in Southern Africa, if we invest much in maybe agriculture, farming, we'll be able to export to these other countries. So commodities, for me, I think it's a good place to make investments.
Okay. So, the agriculture industry has been spoken about year in, year out for the past 20 to 30 years, and most of the political figures and the government and all these big entrepreneurs and big investors say, Zambia can be the food basket of Southern Africa. What are we really lacking in the agriculture sector? What do you think? Probably not. There are many factors, but what do you think is the main factor?
Okay. So I think we need a proper financing mechanism. Like currently we have ZAMES.
Yeah.
ZAMES, maybe it facilitates price discovery in various commodities here in Zambia. And the good part is even the new company that has just come in, it offers commodity futures.
Okay.
Yeah, so like people out there, they should know of the instrument that are trading on this platform. They have commodity futures. They'll be having options as well. A few years, I don't know, a few months or years to come.
Okay.
But I think farmers should be able to understand these trading instruments.
Okay. I don't know about you, Mr. Chua. What do you think about the agriculture industry?
Well, we are rich with resources, and we need to take advantage of it because our geographical location is perfect and it's conducive. The soil, vegetation, we are in the right place. Our weather pattern, even though sometimes it can be faulty, but we still have maize all year round.
Last year we had a bumper harvest, so it's 2.6 million.
But you still find someone eating maize per road.
Yeah.
So we just need to take advantage. And also one important thing is also, I think, spreading the knowledge on these financial instruments. Like Mr. Ngongo said, you spread the knowledge. People need to be aware of these things, and they need to be aware of how they work, especially. Because let's not forget that the farmers are the ones who feed us. As much as they are feeding us, they have people to feed as well. So
and we call them peasants.
And we call them peasants, but they are the richest people. But why aren't we, recognize that? Yeah,
I think it's more of the support, isn't it?
Support, yeah, and also like you say, you need a proper financial, mechanism on how, the farmers and the consumers, suppliers and consumers benefit, especially the farmers, because they deserve it.
Okay. I think that's all for this financial discussion, and we just want to advise our viewers, this is not direct investment advice, and if you act on this investment or financial advice, that's your owner's risk. We will advise people to go to a registered Securities and Exchange Commission financial advisor, and you take it up from there with a good broker. Thank you for watching, and enjoy the rest of your day.